You want to compare different mortgage lenders to see who costs less. But how do you do that? Hi, I'm Lisa. You want to talk to multiple lenders to get a pre-approval letter. And now you need to compare costs. In this episode, we are going to look at the cost of a loan, comparing interest rates, and we're also going to understand private mortgage insurance. First, cost of the loan. Banks are going to charge you an origination or underwriting fee for the loan. Some may tag on other associated costs, such as recording or processing or lawyer fees. Every bank is different. That's why it's so hard to compare. Then there are other professional fees that the bank will pass on to you, like the assessor's fee. This is a third party that the bank hires to look at your house and make sure that the house is worth at least what the bank is lending you. And if you found this lender through a broker, then the broker also charges a fee. The lender may try to sell you points to bring down your interest rate. Each point costs 1% of your loan amount. But the amount of interest that it lowers differs depending on the situation. Points complicates the comparison of costs. So for the purpose of comparing costs, tell the lender that you do not want to purchase any points, regardless of whether you intend to or not. The most expensive part of a mortgage is the interest rate. Lenders most often advertise their interest rate, but unless you pay the entire year's worth of mortgage at once upfront, your interest rate does not reflect the true cost of the loan. Instead, you need to pay attention to the APR, or the annual percentage rate. And for the purpose of comparing lenders, ask your lender what is the APR after your loan cost is added. Because banks vary so much in terms of what they say the cost of their loan is. For example, one bank's origination cost may be really low, but then they'll tag on a whole bunch of other professional fees. So you can't really go by what the banks say their cost is. So to compare apples to apples, have the bank roll all of their costs into the loan itself and then tell you what the APR is with all the costs included. Use this to compare lenders to see which one costs less. You can lock in the rate that the lender tells you once you go under contract. Ask how many days you can lock in this rate. As long as you close within that time frame, they have to honor that rate. Next, let's talk about private mortgage insurance. If you put less than 20% down on your house, your lender is going to require you to buy private mortgage insurance. This insurance pays the lender in case you're not able to make your mortgage, so it does absolutely nothing for you. So if you can, pay 20% down and save on this cost. To recap, the cost of a loan includes a cost that the bank charges to start or process the loan, the interest rate that you will pay over the life of the loan, and insurance that you may have to buy to have the loan. Now, at closing, there will be other closing costs that are not loan costs. These include things like recording fee to transfer the deed to your name and your prorated portion of property tax. These are not part of the loan cost, and so they are not in the conversation today. Then there are also due diligence costs, such as your option money or due diligence money, and inspection costs. You pay for those regardless of whether you close on the house or not, so they are also not in the conversation today. Of the loan costs that we are comparing, because each lender reports their costs so differently, the one message to take home today is to have them roll their cost into the loan and ask what is the APR with cost included. If this is helpful, please give me a thumbs up, share, and subscribe. Also check out other videos I have for first-time homebuyers. Thank you!